Hey, traders, welcome back. I'm going to do something a little bit different this video. I'm going to kind of go through some of the big names that are reporting earnings tonight after the close and tomorrow morning. And I'm going to give you my general thoughts on them and if they're tradable or if they're not tradable. And, how you can kind of use this information to your advantage if you are thinking of trading these things. All right, so let's start off at the top of the list here. We'll go alphabetically. And AMD, Advanced Micro Devices. And you can see here, from a price perspective, obviously we want to be buying this asset. We are, what am I talking about here? Obviously we want to be selling this asset. And we can just take a close look at this. This is along with Intel. This entire sector has kind of been beaten up quite a bit. Intel's doing a little bit better, obviously, right? But AMD, I think, really it's been taken out to the woodshed and put the boots to it. The stock was $2, less than what? 5, 6, 7 months ago. So I'm probably favoring a short on this stock right now. Now, that being said, the earnings estimates are negative 0.3. And if we go to the quarter before, they came in at negative 7. So they're expecting better earnings than the previous quarter, and about in line with the quarter before, and worse than the quarter before. So you can see that it's kind of a mixed bag here, and I'd have to say that the entire sector is doing okay. So I would expect it to potentially maybe even beat 0.03. Okay, now you say, Steve, how do you know that? I can't tell you. I could, but then I'd have to charge you $10,000 because it's something I teach my students. But it's just my fundamental analysis on this asset. And the entire industry. So really, this is not a trade or any opportunity that I see that is going to be revolutionary. I think that negative 0.3 is pretty accurate. So you could maybe sell some premium around this if you wanted to, if you were an options trader, with a skew to the downside. And I'm not going to tell you specifically what strategies I would use, but maybe sell some covered calls if you could get some good prices. Let me go take a quick. Okay, so here is an options chain on AMD. And would I just buy outright puts in this situation? No, because I think they're going to hit expectation. And so far, this market really hasn't been punishing too many stocks, even if you hit expectations. As a matter of fact, if we look at where it's actually rewarding stocks, FCX today is up an insane amount, 14%, and they missed expectations. So you've got to be aware of these types of things. So would I buy an August 4 put in this situation for 85 cents? IV's 6.35, which is okay. The answer is I don't think so. I don't think so. I just don't think that you're going to get enough out of that trade in order to take it. Maybe. It's a tough one. It's a really tough one. So I would probably avoid this trade in general. Like I said, I think they're going to come in right at expectation, and my bias, and I'll let you decide how to trade this, my bias is for them to hit expectation and for the market to have more downside risk than upside risk. I don't really see anything, dramatic here. So the question really is, does the company have any other unknown information that they surprise on you? And that's what I kind of want to stress when I do these videos that are pre-market. You've got to always remember, guys, that these companies can come out and miss expectations, like FCX today, just to give you an example. And look at what the stock did. It's up 14%, and they missed expectation, right? Estimates were 20, and they missed. But they talked about their copper mine in, what's the name of that country? They talked about their copper mine in FCX. 1 second. They guided more with their copper mine in Indonesia. And so these are the things that you don't know that the company is going to do during earnings season. You don't know those types of things. So when I'm telling you guys this stuff, please bear in mind that I don't know. I have no clue if the company has any inside information that's out there. But just looking at this chart, I see very limited upside and more downside potential, but I do see some upside potential, and I expect them to hit on that earnings. All right, let's move on. All right, let's look at another one here, CMG. Getting a lot of attention lately. All kinds of corporate sabotage going on in this stock, and all kinds of interesting things, and all these conspiracy theories, and quite interesting. Yet people keep getting sick by going to their restaurants. So what do I expect for this company? First of all, we have earnings estimates of 216. That's big in comparison to 160, 55, 79, 87, 88. It really wasn't until 2016 that we saw these types of estimates. Way back here, before the big food poisoning scare, it was 459. So I guess what's happened is, as this company has, now got to remember this recent scare, we got this big volume spike down here. That's not going to be in these earnings, so don't count that in at all. That's completely separate from these earnings. All right, so I think that 216 is a bit lofty. I really don't think they can do 216. So I think they're probably going to miss. And the question is, has that miss going to be baked into the stock? And the answer is yeah. It looks like it's baked in, right? I mean, the stock is down from the last earnings. Oh, that's such a cool tool. I love this little tool here. The stock is down from the last earnings almost 30%, right? So if they do hit on this earnings, how much upside does this trade have? I don't think they are going to hit. I think they're going to come in very close to last quarter. And I think that the stock is really, but it's already been baked in. So even if they miss, a lot of that price, a lot of that has been baked into the stock already. It's funny, baked in AAA. Ha 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 ha! I'm so funny. All right. So that being said, I don't really see any play here to the downside or to the upside. I think if you, again, the play is if you want to sell some premium, you'd probably do well in that situation. All right, next. Okay, let's look a little bit at a high flyer here. CNI, CNI, and they're expecting $1 versus 88 cents versus 93 versus 96. Now, I think they're going to get it. By my fundamental analysis, I think they're probably going to hit $1. And the real problem with this stock is that you can see this thing has been baked in. Now, the other thing that's really super important about this is what the heck has been going on with oil. All right? And everybody knows what's going on with oil. Oil's been getting smashed. So, it would not surprise me to see this stock guide worse or come in with some negative guidance. The other thing that you have to keep in mind is, the pipeline deal. This particular company is going to get punted really bad with any pipeline deals because that's one of its major businesses is pipeline, is oil transportation. So the problem with it is that it's already so strong that I hate shorting these types of situations, right? I really hate shorting these types of situations. Also, the Canadian economy's been pretty strong lately, and I think that there'll be, as far as GDP is concerned, there'll be some small upticks as far as GDP. But I sure as heck would like to short it. But there's too many things that are unknown. I think they're going to come in, like I said, and possibly hit that $1 mark. It's very probable they could. Maybe a little bit less, maybe 90, right? So I want to short this, but it's a really difficult trade. Let me just go take a look at some options premiums on them. And again here, let's go 24 days out. The 80 at the monies are $1.25. And implied volatility is really low, so the market's not looking for very much there. Really, there's really nothing really above the market. Really, nothing. So, overall, I don't think I would buy puts in this situation. What I might do is just short some stock and some relatively small size as well too. I think that's not a bad little trade. Just get short on the actual stock. And I might actually do that right now. I think that's not a bad trade at all. Actually, in second thought, I'm going to leave it alone. So let's just do a recap here, shall we? Before I forget. So CNI. All right. So I expect the estimates to hit maybe a little lower. Maybe a little lower. I expect guidance to be lower. I think they'll guide lower overall. The stock itself is way overbaked, and the move has been priced in. All right. Therefore, it's mostly in a void. Okay, because you're gambling on the lower guidance. Well, actually, we forgot guidance lower. Why? Why? Because oil prices. Okay. So in a void with I guess if you want to say if you want to take a gamble with a gamble, and it literally is just a gamble short, it's worth it because the options really don't have a lot of premium in it. So the implied volatility is really low. You're not going to get too much time decay on that option. All right. So there you have it. With a gamble short with options, I think is a fairly without the money options. And I would go out a little bit. I'd probably go out to let's take a look here. 1 second. Yeah, I'd probably go out 52 days on this and do those options right there. And matter of fact, I might just do that. I think that's a decent little trade. I don't think I'm going to get hurt too much in this situation at all, and I should be able to get out of this trade quite nicely. So I think I'm going to actually buy those right now. And again, this is strictly just a gamble. I'm not going to do too much. I'm going to split it 210. And I'm going to buy these puts. Again, why am I doing this if it's a gamble? Well, I'm Canadian. And I happen to know a little bit about the country. So I know that the recent data that's been coming in is really nonsense. I just don't believe any of the data. I think Canada's in for a world of pain. Our oil industry, our shale industry is almost at the point of complete destruction. And so I do think, but I don't have the actual hardcore evidence on that, but I do believe that this is a safe trade, and I'm not going to get hurt too much on the trade, so that's why I'm taking it. So there you have it. Now, unfortunately, this has gone a little bit longer than I wanted. This is really the only trade that I'm going to take. Again, our analysis on Chipotle was that they should miss earnings, but it's been priced in. So I just want to record this all. CMG. CMG is I'm going to expect them to miss earnings. However, that has already been priced in. Being priced in. Guidance, I really don't know what they're going to say other than, you know, maybe some excuses, you know, of more corporate sabotage. All right. I don't know what they're going to say there. So, in this case, I would say selling premium because there is a lot of premium in it right now. However you decide to sell that premium, okay, selling premium with a slight higher bias would be a good strategy. Now, I'm not going to do that, but that would be my trade on that. And then finally, what else do we do? AMD. Yeah, AMD. AMD was a AMD. I would expect that they're going to should hit or slightly beat expectations. Okay. Guidance. I would say really they're not going to do anything. I think that's a non-event. Again, I don't know. I'm not an insider in the company. And then how do we play that? I think the price. I think it's been baked in. So price. The better than expected earnings price is already baked in. So again, sell premium. Is probably the best trade, however you want to structure that. Okay, guys, this has gone on for 21 minutes. I apologize. It's like 10 after 3 right now. By the time you watch this, you won't be able to place trades. So I'm going to get the video out there just for fun. I'm going to put it up on my YouTube channel. If you guys like this, please give me a like and a subscribe. And what I'll do is we'll come back tomorrow. We'll see how that played out. I didn't really get a chance to talk about any of the ones that I really liked. And really the only trade I'm taking right now is the CNI short. Again, I know a little bit about what's going on in Canada, and so I'm going to just gamble a little bit. I didn't take a lot of contracts, so we'll just have to see how that ends up playing out. And there's not a lot of implied volatility in it, so I don't think I'm going to get too hurt if I'm wrong. All right, there you have it. Bye for now. Tell me if you like this, and we'll come back and we'll do a review tomorrow. Bye-bye.